How's it going, everyone? Welcome to the January 27th weekly trade review. This week, I took 9 trades. I had 1 earnings time spread, 1 lotto, and 7 day trades. A little bit less than last week. We're going to get over that in just a second. I want to start first with the market and just give some backdrop as to what was happening this week and what was I thinking in terms of taking my trades. So, on a short-term and a long-term basis, let me clear up this chart so it's not as crazy to see. And I got some old lines here that are not as important, but the main thing here I want to focus on is the price action and these 2 lines. And I'm actually going to draw a new line because I want the color to match, and it is a little bit lighter than I would like. There we go. So you can see that since the election gap, the market has mostly stayed in this horizontal range. Let's call it from 584 to about 608. Now, this doesn't capture everything. You can see there's little pokes. Market all-time high is around 610 right here. But for the vast majority of the time, it has spent time in this range. And when we poke above that range, we usually get a strong move back into the range. So here's the first test of that range, get to the downside. Here's the election gap. We get a tall bounce up. And then earlier in the month, we were in this bearish channel. And then it looks like we had a poke below, bullish engulf, wasn't crazy. And then we had this float higher, gap and go, gap held, gap held, gap held, gap held. Get a little bit of a flat bullish trend day, and then a bit of weakness over here. So this is a light volume rally. And when we started this week on the 27th, we had a we had a big drop down. There was some DeepSeek news. There's some AI news. So big gap down to the 50 SMA, which was right here. I'm going to put up the indicators in a second. This gray line is that 50 SMA, so we're right around that level. This purple line is the AVWAP from the prior all-time high. So have that up because I think it's going to be a bit of a line in the sand. You can see here how the market was trying to get above this level, poke through, fall back, poke through, fall back, broke through over here, came back, retested that level, and then we kind of inched higher. So that line in the sand tells us to be maybe a little bit more mildly bullish in a very short-term scenario, but don't have a ton of confidence over there. So this week we had this bullish trend day, test another little bullish trend day over here, a couple of LPTE days as we have mega cap tech earnings, FOMC, Q4 GDP, and then we had a gap up reversal day on Friday. So there's actually probably some decent day trading opportunities throughout this week. Where my mind is to stick to the day trading only and being open to play both sides. When the week started, we had a big gap down. I didn't know how much of this gap we would fill. If we've held maybe about half of the gap, I felt that I had an opportunity to take some swing shorts. If we filled in all the way to the top of the gap, maybe not as aggressive over here. But then we got this move here, and then we got this nice, almost bearish engulfing candle. Didn't quite get there, but this was a pretty decent volume candle and pretty decent range. But the intraday action was pretty choppy. It wasn't a candle like this, or if we go earlier in the chart, it wasn't a candle like this, or even like this. So we weren't getting that kind of action, or even a candle like over here on the first. So that's the context here. I'm playing it pretty cautious and don't have a lot of swings if I'm doing day trades or something that is non-directional like an earnings time spread. So let's go over the trades for this week. I'm going to start with the earnings time spread that I took on WDC, and I am going to pull up my chart right here on the side. So I have my weekly trade log, and I'm going to start posting the links for these in the video as well, just so if you're watching the video and you want to follow along with the trade logs, then you can take a look at it. So WDC, I took this ETS on the FOMC day, which was on Wednesday, January 29th. And the setup for this, we can no longer see it in the market view tab, but this is what it looks like in the pre-earned options. But the main setup I like here is you want this times exceeded to be less than 20, and you want the difference over here to be greater than 40. So that's the minimum threshold. You also want a decent price, something at least above 15 bucks. And you want decent option liquidity if you need to get out of the trade. So I prefer at least -4 you can actually sometimes get away with, but -4 at the bare minimum. Something like 2, 3, or higher is even better. So this WDC earnings time spread had a times exceeded of 0. It had a difference of about 57. That's the Ivy crush. Its average move was about 5%, and the expected move was about 10%. So WDC has been a tried and true earnings time spread in the past. And this time it was no different. So I took the 63 calls on the 29th, and I took them in the last 30 minutes of the day. So I took the 63 calls for 44 cents. Then let's go back into this M5 chart and take a look at what happened. So we got a big gap up, and then we had a big long red candle down that had a bit of a tail. So on this first gap up, I was watching the price action here, and we had a gap up, but WDC was guiding lower on an EPS basis. So I didn't know how bearish that would make the spread, but I think on a gap up, it favored the downside because there's going to be a little bit more selling pressure. So we opened over here at 66.45. So I was $3.44 off over here, but the average move is about 250. The expected move priced in was about $5. So to give the spread some time to work, initially when it opens, there's a lot of volatility. There's a lot of actions and a lot of bid-ask programs that are testing the bid and ask, especially on these high volume earnings plays. Institutions are trying to make up their mind onto how to position themselves based on this news from earnings. So we had the stock open up. We had a big bearish candle. I like that. We had both the SMAs here, but I wasn't super worried about that in the beginning. When there's earnings and it's early in the day, that's the recipe for getting through these SMAs. It's going to matter a lot less than much later in the day when the volumes dries up, and you can see we actually start to react around that level a lot more. But early in the day when we breach these, we have a lot of potential to kind of clear them. So I'm going to put up the market as well on the side over here, and let's just go back to this day. So gap up, and then the market started to roll down over here and started to fill in some of this gap. I like this bearish action early, and the candles were pretty choppy. So on WDC, I had an order out for 58 cents, which was about a 33% gain. Now, typically on Thursday, you want to target a 40% gain, but I was being a little bit conservative in my play because I didn't know what the market was going to do initially, and I didn't know what the spread was going to do initially. So targeted 30% gain, and I got my fill on that right over here at the 10 o'clock candle. So I got out for a 58 cent. I got it at 58 cents, so I had a 14-cent gain per contract, or a 32% gain overall. Now, a 40% move would be something like 62 cents, so another 4 cents to get out. So I probably would have got that later over here in the day, but you can see that was pretty much catching the low of the day right away, and then stock kind of bounced up, and the spread ended up dying later, and I would not have gotten the same price as I did when I got out earlier over here. So that was a nice win in that time spread, and yeah, just setting the targets and having a plan for what this stock is going to do early on, and watching these initial candles. When I saw these choppy candles here, that's what got me not as excited to stick it out. I'd rather set my target here, not mess around with it too much, and get filled on a move down when people or sellers are really reaching for certain calls, and that's when we get my fill. So that was our non-directional trade. I'm going to go now into my day trades. I'll do day trades and lottos at the same time, and we're going to start over here from Monday. So we're going to start on the 28th on SPY. I'm going to put back up the indicators, at least intraday, and get this back up. So on the 27th, I didn't take any trades. We had a gap down. This was some really garbage price action in my opinion. We held the halfway point of this candle, test, digesting all of these gains at the 50 SMA. So didn't take any trades that day, just played it chill, set some alerts on some stocks, and I was doing some work for my normal 9-to-5 job. There was a lot of volume, as you can see, but there was no direction. So I felt that towards the end of the day, we got a decent close by the high, and I thought we had a good chance to maybe move up later in the day tomorrow. And I was watching to see if sellers were to return tomorrow, if they ended up defending maybe the halfway point of this gap, and we see some nice long red candles, or if buyers are able to take a shot and we're able to get something going here. So the first day I started trading was Tuesday on January 28th. And the first trade I took was net. So we're going to walk through the setup, the entry, what my expectation was on net, and what I was seeing. So here's net on the 28th. You can see that we had a really, really strong breakout in the stock. It was clearing a whole bunch of levels. We can ignore this line, and I'm going to get rid of some of these trend lines here. So it's compressing, and we had a really big pop up over here. I was reading in an article later, this is a tidbit of fundamental that I was looking at, was that the money that was in chip stocks like NVIDIA was being allocated out to not companies that are being AI foundries, but companies that can actually leverage the use of cheaper AIs. And that was the implication of the news of DeepSeek. So you saw a lot of software stocks like Net really, really popping up on that day. Massive heavy volume candles. So this is a stock that I want to trade. So I took a 1 share day trade long at 135 or 138.29, and I took this at the 1150 candle. So we're going to go to that entry, and then we're going to work backwards to see what is the setup that I was looking at over here. All right. So this was a setup on net, and I took it on this breakout at 1145. So I always like to go back in time to say, okay, well, what exactly was I seeing in this stock, and why did I like this entry? So I'm going to go back over here. And then let's go back to SPY at the moment of entry, which was this 1145 candle. All right, so this is what I saw in the stock. This is what I saw in the market. So we had a move down on SPY, and then it made a new all-time high. This is some pretty nice little buying. We got some mixed overlapping candles telling us that the move strength is waning. We got this dip to VWAP. This is some orderly price action. But what I really liked here was, look at this super high volume candle and a bit of a tail. So we have to see the next candles, but that's a mini tail here that, okay, there's some buying coming in at VWAP rather than we're flushing out all these people here. Test, test, test. We're forming some tails over here. We're holding. And notice that all of this has been a bearish cycle. So it's been a benign bearish cycle. And we're starting to get above that 8 EMA and above this small compression. I also know that after this big move here, that we had a really big drop really fast. Okay, we're likely to continue to tread higher later in the day. So that's why I entered net. It was a super strong stock. You can see a ton of volume here. I also liked that it had a flat open at a quick test over here, and then it broke through the high of the day very early, far before SPY did at 9:55. This is SPY at 9:55. It wasn't even above VWAP. So that was honestly probably the first entry somewhere over here, around 132. This is a very early entry, and then stock ran up quite a bit here, and then you can see it was compressing, and it was compressing near the high of the day while SPY was moving lower. So that's what I like to see. Now this compression was a fairly loose compression in my opinion. You can see it was wide and kind of it wasn't a very tight compression, something like if I saw a lot of these tiny candles here. This wide compression tells us that buyers and sellers are battling it out. So my plan was SPY should be able to get back to the high of the day. I want to see what it does over here. This is not a terrible drop, but I do want to make sure that we get to the high of the day pretty quickly. We don't get knocked down too hard, and that this bullish trend is still in full motion. So after this breakout, you can see that we actually had to test the breakout, and then we started to move higher. And this just confirms that after a very strong upward trend like this, it'll transform into a kind of a mildly bullish trend where there's still some profit taking and there's still some buyers, but sellers are a little bit stronger, buyers are a little bit less strong, and that's why we enter this kind of choppy trading channel. So market starts to rally here. We barely make a new high of the day, and then we're kind of compressing here with some tiny body candles. So at this juncture, I'm thinking, okay, well, this bullish cycle did produce, but this is a marginal new high. So if it starts to get knocked down too hard, I'm going to have to get out of the trades. So I'm watching over here, and this was the clue pretty much right here, where we get knocked down, and then boom. We don't get knocked down too hard. Tiny little knockdown, and then break out to a new high. So this is happening at once. SPY is looking pretty good. Now, net moves up over here. I was actually thinking of taking a profit over here, but I figured since it was a bullish trend day, I had a chance to kind of let net ride a little bit longer. Ended up being not a mistake, but a big miss, where this was a bullish channel that I mentioned, and you can see if I draw the upward part of this bullish channel right over here, that is our buying climax. That's why I had a bit of a warning sign over there. Then bearish engulf at the high of the day, some decent volume there, and started to rally lower while the market was rallying higher. So this is at 12.25, right? Market is sidelined and moved down a little bit lower. And then stock, market makes a new high at 1. What does the stock do at 1? It's actually still selling off. So it looks like this stock is gonzo, right? Dead in the water, not doing anything. It's lost its relative strength. But I knew two things. One, this is a really strong trend, and I'm sized to this pivot right here. You can see that this was this pivot low at 136.48, and we poked above it a little bit, and then we actually snapped back above it right over here. So I was watching to see what net does at this pivot low, and if it starts to break through, then I may have to consider getting out of the trade. And if the market started to roll over a little bit too hard, I'd also have to consider taking the loss on this trade. So that was net, and I'm still holding it because the market is still bullish. We're still moving up higher. We haven't seen any sort of deeper little dip over here. And this was the first deeper little dip that got to this prior low right here. So we got a nice move here. We got a bit of a choppy move lower. This is a deeper dip than we'd seen previously. But then we got some nice steady buying off of that dip that erased it pretty quickly, and we got back on track to a new high of the day, also fairly quickly. So we're still back on track here. Now net is starting to move sideways, and let's look at what's happening over here. 155, right? Market starting to move lower. Net is starting to regain its relative strength. So if I were to exit net, and here's the game plan that I had. My entry was right around here. So I would either have to scratch this trade or be willing to hold through the next bounce. Exiting here is the no man's land zone. That's kind of the main thing I want to impress over here, that you either exit early or you take a lot of heat and then you wait for that bounce. But if you're not willing to take the heat, you got to scratch out, because over here is a no man's land zone where you're going to be taking a loss, and you have to kind of wait for the highest probability loss. And if you're going to take some heat, it means you're going to have to take some pain. So over here, start to get some relative strength, and we get a higher low, double bottom. And the last thing I'm watching for in net, we also have a little HA reversal over here. We have a flat bottom HA candle. I'm waiting for this candle to clear this high. So if it can get close to 138, eat away at this candle, then I'm going to be back in the trade. So we start to get that right over here, 230, right? We get that candle, and let's look at the market at 230. Starts to rally. Okay, so net's looking pretty good. This is where I should have added to net, but I did not. And I think I'd made food or something, or I had a meeting, but I just missed the ad over here. So didn't end up adding to net, and market started to rally up higher. And then when net had a nice long candle, that's probably when I should have taken gains at the top here, but I actually took gains at 139.08. So took maybe like a 70-cent gain on this stock, which was an okay gain. It's not the worst. It's not the best. Ended up getting back closer to 140 later in the day. and held some of this candle. We need to see half of this candle hold, and when we start to poke below half the candle, I thought, look, I've already waited for this stock to make its move, and my plan was to take gains at the high of the day, and that's kind of what I did. And yeah, SPY pretty much compressed for the rest of the day, and so did NET. So that was a nice little trade, and I was pretty proud on the fact that I was willing to hold through the pullback and knew that we had another chance to test the high of the day, or for this stock to regain its footing because the market was bullish. I mentioned this in the one option chat, so I was pretty proud to share that trade. Now, the other one that I took on the 28th was Twilio. Let's look at this stock on the 28th. So big gap up from some news. I forgot what the news was. Let's see if it's coming up over here. AI integration growth. AI demand surges. All right, so there's some AI news, I guess. But technically, you can see that we had a day to digest the AI news, a second day, and then we broke out of this compression. So I really liked this setup over here. And I'm going to look at the M30 chart because I think it's a little more telling, where compress, 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 and then we break out of this compression fairly early. So that's what I liked on the chart. And then let's look at the stock over here on that day. So here's Twilio on this day. Broke out of the compression, but it was looking decent over here. And you can see that it had a big move up. Not a big move up. It had a move up over here, but this is some choppy price action here. You can see that we have every move getting retraced after this nice little run of candles. And then we had a bullish channel, buying climax, and then a sell-off. So that's a pretty common pattern. Test, strong move, bullish channel, buying climax, enter. So honestly, if you don't enter early on these candles, or you don't know to take profits on this bullish selling climax, or this buying climax, bullish selling climax makes no sense. This buying climax, then you're going to have to wait for the pullback. So a new tool was good, and I said, okay, it's pulling back over here. Let me get an alert when it starts to gain relative strength, and let me get an alert when it starts to get above VWAP. So I got that over here at around 155. And I took it on I took it at 205 right over here at 146.42. And if we look at the market at 205, market was going down, but I knew we had a chance to test the high of the day. Twilio had a nice strong move. So this was the setup that I saw on both. So this is what it looked like when I entered the trade. And my target was take some gains at the high of the day. This is a decent pullback here that got below VWAP, so we may not be able to get as far. But look at these nice orderly green candles with little retracement. That's some strong buying. We're going to have some follow through. So I got the market right. And then Twilio was also looking pretty good. But then these candles weren't really as strong as this market candle over here. See this nice orderly buying over here. This is average volume. So this is decent volume. Little overlap, many consecutive medium-sized candles. That's a very strong move that we can stick with. So it's got over here, but these are some mixed candles, tiny bodies. We're getting challenged over here. We're approaching this high. And then at this candle right here, I took gains at 147.40, which I believe was the next little, kind of right over here when I got this tiny little bullish hammer. We start to pull back lower. You know, market's made its move, and it's also getting close to the end of the day. So decided I got a nice little gain in Twilio. I'm going to take it, and I took $1.25 per share on that stock. So that was a nice little win on that guy, and that was the only two trades I took that day. Next trade I took was Reddit. And this was the only trade I took on the 29th. So looking on this day, it was an FOMC day. I'm not trading this garbage earlier in the day. We got some Donald Trump news, came back in over here, tested, and then we have this FOMC garbage chop over here, right? Just pure pure mess, just a huge mess. So while this Reddit chart loads, I may pull it up over here in the meantime so we can just take a look. Let me do that while this is loading up on the side. Okay, so here is Reddit on the 29th, and the main thing I want to impress is that we have a strong chart, and it had compressed, held the gains while the market was moving back, and it started to break above this compression the day before, and it had held the gains on the day of the FOMC. So going to that Reddit M5 chart, and it's going to be this is going to be a little bit of a messier look because I have these VWAP auto anchors. So let me hide that for right now. I'm going to put up the 8 EMA, or actually maybe it's already over here. Okay. So let's look at Reddit over here. Did it load up over here? All right, perfect. So let's go over here. And I already showed you the D1 chart for Reddit. We had a nice little breakout. Let's look at this M5 chart for this stock. And the entire day, we had this gap up, long red candle. We held half of this gap, and then we're just chopping around completely sideways for the rest of the day. And what I liked is that we were holding all the gains from this breakout. So here's the breakout right here. You can see that Reddit either pulls back and then launches higher, pulls back, compresses, launches higher, compresses, launches higher. So you want to enter in on these dips on the stock, and that's when you want to add over here. That's the nature of how the stock is moving right now. So I'm over here, I'm waiting, and market's moving lower. We poke through the downside, and then we get a breakout right at 230. Market makes a nice move up higher, and I'm setting alerts, and I see that Reddit is actually near its high of the day. And we get the super long green candle on heavy volume that closes above this breakout right here. So I go long Reddit at 203.65, which is somewhere right at this candle. I think the better entry is at 203, just slightly, because I really want to get a really good entry on these breakout candles. And 203 or even near the test of this breakout at 201 would be ideal, but we saw that we never quite got to it. So if you can just enter near the open, you get this breakout candle that closes at 203, and maybe the next candle might waffle around. It might follow through, it might test it, but you want to get in at 203 because that's the best price. The move is now confirmed. We want to get the best price in on that move. So you can see that we had a little bit of follow through, and then we had some chop. The stock is chopping around, and I didn't mind it too much because the market was moving a little bit lower. So it's moving lower, but Reddit was holding its own. Then the market popped up and it made a new high, and I wanted to see it start to break through this new high over here. We had this nice green candle, and then at 325 we had a nice little follow through candle. So we got a nice green candle here, and here's the follow through candle at 325. And I said, you know what, man? Last 30 minutes in the day. There's also meta earnings, so I was definitely not going to swing it overnight. I wanted to make a new high of the day before the market did. That's what I really wanted to see in Reddit, and I didn't quite get that. It started to lose. It started to flatline over here. It's chopping around a little bit too hard, and it already made a decent move, so I didn't get as strong as a follow through as I would have liked, so I actually ended up exiting this trade at 205. So I mentioned that the stock didn't be as strong as I wanted it to be, and SPY was not as bullish as I wanted it to be. You can see that there's some back and forth action over here. If this didn't have a nice follow through, it was likely to get faded. Because look, right, we get a move down, get a long bar, a little bit of follow through, test the upside, no follow through, test the downside, long bar, no follow through. What are we going to do? Probably test the downside again. It's probably going to chop around and end up closing right at VWAP. So took over here, and I got out at a pretty nice exit. I got it at 205.49. So end up getting a very close to the top, which was a bit of a lucky exit. And if I'd missed that exit, I probably would have scratched out of this trade on this candle right here. It's a nice long candle closing on that level, which should not have happened. And that was on this 330 candle here. This is the 330 candle on Reddit. So you can see that there was some profit taking going on. So took some nice gains over here at 205.49. So that was a little bit less than $2, maybe $1.86, something like that, which was a decent gain on the stock, especially for a small little late day trade. All right, so moving on to Thursday, which was 1:30. I took 3 trades on Thursday. The first was Teva, and let's look at this D1 stock, this D1 chart first, and let's look at this market chart over here. So market had a gap up, and then we had some red candles with a little bit of wicks and overlaps. So I like this move lower, and I took a day trade short on Teva at the 10-10 candle. So here was the setup on the D1. This stock was weak post earn at this nice little double top over here, and it was through the gap, through both its SMAs the prior day, closed near its low. And by the way, what did the market do the day before? Market was flat. Market was not really selling off. This stock was selling off quite hard on very, very heavy volume. So I loved what I saw in Teva. And I'm actually going to go to this M30 chart because that's the I want to talk about the second thing I liked in this stock, which was here is this setup, big move down, and then we're just compressing the entire day. We're holding all of those gains, and we're not able to bounce. So if this stock started to break through the low of the day, we would have a really nice shorting opportunity. So that's what I saw in the stock, and we got that breakout pretty much on the first candle of that day. And I entered Teva right here. So this was that candle, but this was the setup that I saw in the stock. Here's a 10:05 candle, and let's look at SPY at 10:05 right over here. So this is the setup I saw in both the stock and the market. And I felt that, look, maybe we have a decent chance to test the downside somewhere over here. We have some gap fill over here. We have the prior day low right over here. And, you know, maybe this level is going to come into play as well. If we drew a VWAP from, I think, 2 days ago, that's probably going to come into play. And I'm actually going to pull that up on this SPY chart here. Here we go. Just to show you. So this trading view chart, by the way, is like a lot of extra little detail that I don't always want to see, but if I need to see, then I can pull it up quickly. So here is the VWAP from a couple days ago in SPY. It's coming up right over here on this move down, and if I were to actually drop one right here, yep, you can see that that was a line in the sand for the stock, and that's what it was kind of holding and testing on the past couple of days. So I'm going to hide that for now because it's a lot to see. So my bias here is, okay, well, Teva's looking pretty nice, and we have room on this stock too, that 200-day SMA, which is coming into play around 1765. So stock is looking good. This is a nice point to get in, but this is getting, you can see that it pulls back to the 8 EMA. So I don't want to chase this at the low. I could probably get a better price if I wait for a little bit of a pop. So I entered at 1807, and I'm willing to take a pop somewhere up to here. And I even thought, okay, well, if it breaks through the 200-day SMA, I still have a chance to maybe get a decent loss if it really spikes up really hard. But I thought that was not very likely considering we had this very big M30 compression break. So let me reorient this. So we get a bit of a pop and then bam, long red candle. I like that candle quite a bit. I was considering adding, but if you look at the market over here, it's getting kind of choppy. We're not getting immediate follow through. So I'm like, well, I still like the stock, but I'm not crazy about the market. So I'm not going to add right away over here. Now Teva is moving lower, and I like this move all the way down. And then at 11 o'clock, we get this big bullish engulfing candle. and that lines up with this bullish hammer and this 1OP cross. So I don't really like that candle. I want to see it get smacked down. Okay, one pause, not a fan, needs to get smacked down, and we get a bit of a hammer over here. Okay, well, not the end of the world. Still like the hammer. And we get a bit of a move up over here. And at this point, actually, since my order's at 1807, I have a order out to scratch this trade if it starts to move against me, because this move down on the market is pretty weak. You can see there's a lot of chop. There's a lot of overlap on these candles. So I'm not super confident that this move is going to continue, and I felt it's more likely that the market was going to bounce up higher. So market ended up getting that bounce up higher, and I scratched out of Teva on this candle right here at 1120. So scratch out of the trade, not the end of the world, but also not, I guess it could be worse. Now, market ended up rallying. We pulled back, got a nice big move up to VWAP, and then we get a higher low. So if you missed the chance to exit shorts here, you could have exited on this move lower when we started to hold the gains and advance up a little bit higher. So 1245 was your exit for a lot of shorts. Now Teva tested VWAP, and on this candle at 1140 was when I probably could have considered re-entering the trade, but here is the market at 1140. Decent move, tall move, and we still have to wait for it to test VWAP. So, wouldn't be crazy about entering it right here. And I actually would have ended up getting my hit on Teva at 1205, which was right here. So the stock really did move independently of the market, and I think I made the right decision market-wise to enter the trade, because if you look at the move from 1005 to 1020, here is 1005, and then here is 1020, or sorry, 1120, my bad, right? So that actually would have been a win on the stock, but I scratched out of this trade, but then I would have ended up being a winner. So I'm still torn on how I maybe should have traded this. I think all in all, it was probably a lot of good decisions, but maybe the consideration I had to make was Teva kind of does its own thing. It's very newsy. It's pharmaceuticals. It acts like a biotech stock sometimes, and that this D1 setup was very, very strong. So I could have held on this notion, and I think this was the key, was that we did see some selling pressure. It was decent. We're probably going to get one more drop. It's not like it's not like the market's going to completely V up all the way over here. The move up on recent days there's been some challenges, right? This is a good move up earlier, and then we're testing this level a couple times here. Here's a prior day high. We're in an inside day. We're probably not going to just ricochet and, pop up immediately. We're going to see sellers take another crack. So on the notion that sellers are going to take another crack, that is how I could have held Teva. I think it's maybe a little more advanced. I think the scratch is not a bad play. I think it's like a good, solid B+ play, but like a pro play would have been to know that we're going to get maybe one more leg down. And Teva hit my target right away. It hit my target about 45 minutes afterwards. And then you can see it held that 200-day SMA, and then it started to bounce. So didn't miss a ton of gains after that point. So that was Teva. Think pretty decent overall, but I'm always looking to improve. So I want to see how I could have done better. Now, the other stock I took on this day was, I believe I took SPY short over here. And I don't know why I pulled up SPY over here when I just have the chart, but I'm going to pull up. The other trade I'm going to talk about is VST. That's another one I took that day. But let me look at SPY right now here. So I took SPY short at 10:30, and this is where I took it short right over here. And I took it short at 6:02.64. So here's why I took the trade. We had a gap up. We had a weak move high. You can see we had a long green candle with no volume. Tail tail, and I was really thinking of shorting here, but I was like, you know what? Maybe this is not enough confirmation. I might be really over anticipating this move. Then we got this big drop down here, and then I'm thinking, oh man, well, I really should have taken it up here. So when you're thinking of that, and it really just says, look, you are in an LPT environment. Like, this is some low volume garbage chop. Don't get crazy. And keep that theme in mind, because it's going to explain how I could have improved this trade. So we got this candle here, and I'm like, all right, well, I don't want to chase too hard, but I really like this compression break, right? We had a test, couple of tails here. I'm waiting, and then boom, we start to close below these tails, get into the gap. Okay, I like this. Look at this volume, though. No volume on this goddamn candle. What happens immediately? Bullish candle, retrace. Now, my stop on this candle mentally is the high of this. If this is a good trend, we shouldn't eclipse the open of this candle. And then we don't. And then we're kind of in this like weird choppy thing. And then I actually end up scratching out of the trade here at 602.39. So I take a small, very tiny win right here. And I'm like, you know, like we're right over here. We're not, it doesn't look like we're really going to get through this low of the day because we had this high volume bullish hammer. So I'm thinking, all right, well, this is kind of a garbage move here. Let me scratch out rather than wait for this to smack up against me in the face. And then we get the next leg lower. So from looking back at this trade, the realization is that if this is a low volume choppy day, never enter SPY at the low of the day. This is some garbage crap right over here. It's going to pull back to that 8 EMA, set a bid for higher. So I could have set a bid at maybe the halfway point, maybe at the 8 EMA. Let's call it 603.50. Set an order out to get filled right over here. And then when we make a new low of the day, take gains. $2 in that move. Easy, right? High volume candle starts to get faded. Okay. Wait for the pullback. Short over here. 604. New drop to new low of the day. Take gains. That's $1.50, right? 15 points. 20 points. So this is some low volume garbage, and I've been trading a lot less SPY and low volume garbage. I like the setup, but I just didn't realize enough of that context. There's no heavy volume for this to have follow through. This long red candle with low volume, it's going to get retraced at least halfway, right? Maybe even 2/3 of the way. That tells us that this move is weak. Get in at a better price, right? It moved up against me $1. So my entry on that was bad. That was the improvement. Now, this is a low odds environment, so I'm cool with taking a scratch out and a tiny win. Not the end of the world. And I think overall it was a B trade in terms of how I managed it, but my entry was a C. I really need to get the better entries on these low volume days. And I don't trade too much of these, but I like this setup over here, this gap to fill on the downside. So last trade I took for today was VST, and I took this at 11:30 over here, and 11:35. So I took VST at 170.40, so right over here. And if I look at SPY at 11:35, which was right over here. So my bias now in SPY had shifted to something that was a little bit more bullish, and I loved that VST. I love this pattern here. When a stock has a nice move here, market's moving lower, stock compresses near the high of the day, and see how we have the same highs over here, hitting this 169 level, and then we have higher lows the whole time. Low, 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 right? So we're inching up higher this whole time, and then as soon as the market gets some tailwind, boom, pop out of the box and heavy volume. Now, you could enter on this candle. Don't love it because I don't like this tail. If it closed above this candle cleanly, I would take that trade instantly. Now, we got this next candle follow through. I like that, especially when, look at the market over here at the 11:30 candle. Market was down, stock moved up higher. Okay, I like it. So, end of the candle here, but I scratched out of the trade very, very quickly. Scratched out of the trade somewhere at the 11:45 the open of this candle right over here is where I scratched. And it was because I just didn't have any mental capacity to stay in this trade. This was not a technical issue. This was just a pure mindset issue. I didn't want this to take any heat. I scratched out of Teva. I had scratched out of SPY, and I didn't want to have a loser for the day. That's why I scratched out of this trade. And that cost me. This was a $4 winner. This is a weak move up higher, a little bit of a pullback, and the market had a nice little bullish trend for the rest of the day. So I had a great entry with the stock and the market. Now, I probably would have taken gains on this. You had to see that we had this dip. We didn't have no follow through, breakout, and then we had a marginal new high, and the stock was losing some relative strength here at 130, 135. So I would have taken gains maybe somewhere close to maybe call it 174-ish. That's still a 350 move. That's a pretty decent move in this stock, and the market is bullish. So when it stops rallying over here, I would have taken my gains, and I may have missed this end of the move, but at this point, there's not that much meat left on the bone, and it's starting to deteriorate in quality. So my mindset kind of kept me out of a pretty nice winner. So I had a scratch on that. I think everything I did technically was right, but it was the mental aspect of just taking 2 scratches and kind of being thrown off a little bit in the market. I think it was a difficult day. A lot of traders were saying it was a tougher day in the chat, so I'm not going to beat myself up about it too much. I had 3 scratches on a day where you could easily have 2 or 3 big losses. I'm going to work on continuing to get better on getting a trades on that day, but this is a pretty textbook setup, and I feel like I can do better to stick with something like this in the future. Okay, let's go into the next day, which was SPY on 131. And I took a day trade short on SPY at 605.60. So I took it right over here, and I got in on this trade right pretty much early on the open of this candle. So I got filled somewhere right over here. Now, here's the setup that we had. Gap up. This is a weak move to the new all-time high. Test it. We get a move down lower. We have some tails above VWAP. So this is looking like a nice little entry point for the market to stage another rally higher. Okay. We get a double top, lower high, and this green candle is not seeing any follow through, and we start to fade it over here. So it's not looking super strong. And then we get this nice long red candle. Okay, so now we're not going to chase this candle because it could still be a double bottom lower high, and we need to make sure we clear that low of the day. So this was a huge tell for me. Massive tell, because if this was a one-off candle, like look at this Trump candle earlier, right? Not the same exact setup, but see how this candle got instantly bought back up? This wide doji told me that it did not get instantly bought back up because sellers were keeping a lid, and notice the massive volume spike over here. Massive volume spike. We're flushing out all these people who bought over here, right? We got some low of the day buyers coming up over here. Break through the low of the day. So this is not a bad entry point to get in on the trend. At, call it 606.83, and you'd expect very little retracement. You'd want this open to hold, and at least the halfway point of this bar to hold, which it did on the prior candle. So I joined this on this long candle here. Now, this is the difference between my trade today and my trade on SPY here. No volume today, mixed overlapping candles over here. On this move here, very little overlap on these candles. The one thing I was concerned was that when SPY makes a big move and it's far from the 8 EMA, it will usually catch up to the 8 EMA a little bit. So that's why I sized it over here, but I was a little bit, I didn't want to chase the low of the day. So my entry was a B plus entry. Now we had a bit bigger of a move that tested the open, and then we got a bit of a tail. So okay, I like that, but I did not like this candle over here. because I was like, all right, you know what, man? Maybe this is going to be a double bottom. Maybe I should exit the trade. That's what I was thinking. And I scratched this trade. I got out at 605.60 on the 150, at the open of this candle. So here's where I got out of the trade. This is what I was seeing. I was like, you know what? I think this is going to stop. I don't have a lot of faith in this. That was a dumb decision. Now, this move lower was choppy. Absolutely choppy. Didn't have a ton of faith in this. But it was the same idea that, like, this is a strong move. You can see here, very heavy selling, bearish channel. This is not going to turn on a dime when we see some stacked red candles. A red solo can turn on a dime, right? Even this candle, we had a bunch of buying here. The context matters. We had 2 long red candles. They got bought back up because of all this buying over here. Where the hell's the buying over here? This is some wimpy price action. We're near the all-time high. This is when we're prone to a gap reversal. So I was kind of pissed at myself because I was thinking, all right, well, I panicked out of the trade because I was too worried about missing money. And there was 50 points to be made. This was $5 to be made on SPY. So that's the tough thing about trading it. And look, in my head, I really wanted to see some very strong stacked red candles, some very orderly price action. We didn't quite get that, and I didn't quite stick with the move. But this wasn't a super low probability move. This was a pretty decent medium probability move, and really felt like I should have stuck with it. So scratched out of that one. Was a little bit pissed about that, but it is what it is, and that's why I'm making these videos, to look at the decision in the past and say, all right, well, how have I done, and how have I, where can I be better? And the clue here was that trust this move. This move is not going to reverse, and if it closes above that high, fine, take the loss, okay? But it never did. It never closed above the candle. Never tested over here. Never closed above it. Long red candle, never closed above it. And these moves tend to stick mostly through the low of the day. So that was the move there on that candle. Last trade I took was a Google Lotto. And it was honestly the same reason I lost on this Lotto was the same reason I scratched out on SPY here. Now, Google was a really strong stock. Very, very strong stock, and the 205 Lottos were really nice price point that were set up. And I took them late in the day at 2:30. So I took them right here, and I got the 205 Lottos for 30 cents. So liked what I saw over there in Google. Just holding all these gains while the market is selling off. Now, sell-off was a tad too strong. Google broke the VWAP and never had a chance to recover. I ended up getting out at 2 cents. I figured this stock has no chance to get back to the high of the day. Let me at least save 2 cents on this rather than taking the extra 2 cents. But really personal preference. Basically a normal loser for a Lotto. So in hindsight, where did I take it? I took it at 2:30. Now, a couple people also took the Google Lotto right over here. I think it's understandable, but I just predicted the market wrong. That's as simple as that, right? I saw this, and I'm like, all right, I think we're going to bounce up. And I don't need to bounce up too hard. I just need to bounce up a little bit. And we never quite got there. So that was the loss I took in the Google Lotto. So overall for this week, I had some nice wins on some day trades, but a couple of scratches as well on some day trades, especially later in the week. Scratched Teva, scratched SPY twice, scratched VST, and I took the loss in the Google Lotto. So I didn't have a ton of conviction in some of my day trades, and it ended up costing me because I believe every single trade I scratched on would have been right with more time. That's pretty much the takeaway. And the Google Lotto, well, not super strong. I think it was a pretty decent play, but my lottos have not been great this month, so I'm going to talk about that in potentially a monthly recap, but it might be something I cut. So that was all the trades I took for January. Hope you guys found this interesting. Again, I will link this in the chat or in the description of this video. But thank you for watching, everyone, and I will see you all in the next video.